First we had FTX, then we had BlockFi, and now we got a new grift from Andrei Jikh. This guy never learns. I love it. He makes my life so easy. Welcome back to Strongman Personal Finance. I was watching a new video by Andrei Jikh called something about ChatGPT, because he just talks about, the lamest, boring, most, vanilla trends that are going on in the world. Whatever. But he had an interesting sponsor. We're going to react to Andrei Jikh's sponsorship shilling, and then we're going to investigate the sponsor a little bit more. And I'm going to tell you how it's a little misleading, and you'll probably lose your butt, or even if you don't, you'll probably underperform the broader stock market by investing in this. Let's watch.
This is going to get juicy, but first a quick word from today's sponsor. All right, so demand for alternative investments is exploding. Some are estimating between $500 billion to $1.3 trillion in alternative asset growth between now and 2025. But there's a problem. The alternative investments industry has historically been expensive, inefficient, and inaccessible. When I started my investing journey, for example, in 2014, I started with the stock market because it was easy to get into. But as I started to learn more and more, I realized I had to diversify and put my money somewhere else.
Listen to what he's saying. He started off investing in the stock market. He was probably buying index funds. Good for you, Andrei. I can't knock you for that. And then he realized, because he's such a genius, he needs to invest in alternative investments. So what did this clown do? Well, he invested in Pokemon cards, which is a bubble. He put his money in multiple crypto brokers that, went bankrupt. He shilled FTX, and he even bought an NFT on an app which he could then not access and liquidate. This is the guy telling you about alternative investments, and he's telling you his stupid little story that's a complete and utter train wreck. But you can trust him, right? Let's keep watching.
And that's when I wanted to get into real estate, but I knew I didn't have enough money or knowledge to get started, and that was a problem. And ever since, I've been trying to find the solution, and I think I have with Fundrise. Fundrise is the largest direct-to-consumer alternative investment platform that is serving more than 1.7 million people and managing over $6 billion worth of assets across real estate, venture capital, and private credit. Now, Fundrise has also eliminated the need for a middleman, which is how they're able to lower their fees significantly. And since 2014, Fundrise investors have earned more than $100 million in dividend payouts. And
you got $100 million in dividends. So, Andrei Jikh is shilling Fundrise, which is basically this private real estate investing trust that invests in real estate. Cool, right? I mean, real estate's not a scam. But he talks about how they have low fees. They have low fees, right? Well, that's interesting because I know that there's actually this alternative. Well, it's not an alternative. It's a real investment that doesn't charge nearly as much as Fundrise. We'll cover that in a second. But let's cover Fundrise's fees. Remember, most index funds charge like a 0.03% expense ratio, at least index funds like VTI, VOO, where you get broad exposure to the entire stock market. What does Fundrise charge? An annual advisory fee of 0.15%, so that's already 5 times as expensive as the S&P 500, the VOO ETF, and an annual asset management fee of 0.85%. So right off the bat, you're paying a 1% fee, which is like 33 times more expensive than just owning a broad market index. And there's also real estate investment trusts out there that are publicly traded, and they're liquid, which we'll talk about in a second, that charge a fraction of this, and you could sell them at any time. What? Low fees? What kind of crack are you smoking, Andrei Jikh? But it gets even better. Let's keep watching.
since I love dividends and I love real estate, this makes perfect sense, which is why I've been using them since November 2019. Fundrise investors also experienced a year-to-date return of 5.4% in 2022, which is an outperformance relative to the stock market of about 30%.
Okay, So here he is highlighting 1 year of returns. And I'll give it to Fundrise. If you count the returns that they're showing, which are very selectively doctored on their website, oh, by the way, then yeah, they outperformed public REITs and public stocks. Let's go to the website and look, and then I'm going to show you my maths that I did. Now, before we continue roasting Andrei Jikh, let me introduce you to a legitimate sponsor that can provide a legitimate good or service that isn't going to absolutely rip you off. HomeServiceCPA.com. If you are a business owner and you want to focus on growing your business, managing your employees, interacting with your clients, and you want to leave your payroll, bookkeeping, and taxes to an accounting professional, you should consider HomeServiceCPA.com. It is extremely important to make sure you are in compliance with the laws of your state and that you have excellent bookkeeping and that you file your taxes timely and accurately, because a mistake in any one of these categories could potentially damage your business to such an extent that you may go out of business. I highly recommend Home Service CPA. As a CPA myself, and I encourage you to consider hiring these individuals to manage your payroll, your bookkeeping, and your taxes. And if you sign up now, there's a coupon code STRONGMAN. You'll see a pinned comment with that coupon code. You can save $200. HomeServiceCPA.com. So here is the annual returns of client accounts. And to be honest, to me, it's kind of fishy that the returns for Fundrise are always positive. And the question that I have is, how are you really measuring returns? Is it just income based? And how are you measuring the returns of capital appreciation? Because in the stock market, you see you have like public REITs here and public stocks. When the market goes down, you're going to see negative returns because the market's going down. When it comes to private investments, I think it's a lot harder to really measure the capital appreciation or depreciation of an asset. But that's besides the point. So let's look at the returns. So we have from 2017 all the way to 2022. And we can see from Q3, which is over, Fundrise has done better. They've absolutely crushed public REITs and public stocks. So you may look at this and be like, well, Fundrise, it's always positive and it always outperforms. Well, let's do some math here. So I went ahead and brought this data over and I said, okay, let's assume that we invest $100,000 in each one of these. $100,000 in Fundrise, $100,000 in public REITs, and $100,000 in public stocks. Well, if you selectively add up the returns for Fundrise through Q3 specifically, when we're in a bear market, you would have $182,000, assuming you had invested $100,000 in 2017. Public REITs, you would only have $126,000. And public stocks, you would have $177,000. So specifically for this time period, very specifically, yes, Fundrise would have outperformed. But what if we excluded 2022? Because if they can find a selective period where they can exclude, then I guess I can too. And obviously they're doing it in the middle of a bear market, which is hilarious. If you exclude 2022, because why not, bruh? Fundrise actually massively underperformed. Look at the difference between public stocks and Fundrise. That's $60,000 of performance just by selectively excluding one time period. And guess what's going to happen when we have another bull market with public stocks and public REITs? It's going to massively crush Fundrise. But they're just going to selectively find a time period that makes them look good. So, of course, Andrei Jikh is specifically identifying this period of performance. But what about this? When Fundrise underperformed? And what about 2019 when Fundrise massively outperformed? And what about 2017 when they massively underperformed public stocks? But the first 3 quarters of 2022. Good job, Andrei. Let's keep watching.
When I started with $1,000, and as I got more comfortable using the app, I started to reinvest automatically every single month. Now, past performance is not a guarantee of future results, but so far my overall net return since I started is over 7%, which is pretty incredible considering everything going on in today's markets. Now, you have to do your own due diligence on this, but I've personally had a great experience using them. So go check them out using my link down below. Thank you, Fundrise, for sponsoring this portion of the video. Now let's get back to it.
Now, the last and most hilarious thing about Fundrise is that it's highly illiquid. It is the nature of investing in private real estate deals. It is highly illiquid. And I learned this lesson many years ago when I put money in, Lending Club. When you put money in here, Fundrise takes your money and they're going to use that to, buy a property or rehabilitate a property or do whatever they're going to do. And it's going to be extremely difficult to get your money out. Now, here's the hilarious thing. Andrei Jikh has been known for putting or encouraging you or shilling brokers or places where you could put your money where it's hard to get the money out. Specifically, BlockFi and FTX when they went bankrupt. But let's read this disclosure from Fundrise. How does withdrawing money work? Important! In order to protect the entire Fundrise investor community, we may suspend redemptions during periods of extreme economic uncertainty. So at the time that you may need access to your money most, they may suspend redemptions. What does that sound like, ladies and gentlemen? Now, I'm not saying this is a crypto company, but it's the same concept where when you need the money, you may not be able to get it. Private market real estate is naturally illiquid. That means it's hard to convert to cash. Unlike securities such as public stocks, this kind of real estate doesn't have an always-on market where buyers are readily available and sales can be facilitated in a matter of minutes. So what do you think about this, ladies and gentlemen? Do you want to invest in a place that selectively doctors their returns to make themselves look good over a very specific period of time? Do you want to pay a 1% asset management fee? Do you want to put your money in highly illiquid investments where you may not be able to redeem them during times of extreme economic uncertainty? And do you trust Andrei Jikh or do you trust Strongman Personal Finance? Obviously, you trust Andrei. He's got more subscribers. That's it, guys. Hope you enjoyed the video. Have a wonderful day. Cheers.